What is going on, everybody? Happy Friday evening. Happy whatever day, time it is when you are watching this later on. If you are not watching on the live stream, thank you again for tuning in. Another episode of Technically Options live here on Benzinga as we let everybody kind of get filtered in from the transfer over. I'm not sure what was on just before, but I can see everybody starting to filter in now. So they must have switched the link over. So good evening, good evening, good evening. We are live again, another Friday evening here on Benzinga. Let me click off my ad. Hold on one second so I can monitor the stream properly. Turn the volume off so I don't have to listen to myself talk. And there we go. All right, my name is Brad. If you are not familiar with what we do here, we are a show about options trading and technical analysis specifically. But we also focus heavily on options flow. We focus on how to use options flow for a means to become a successful options trader. We use flow as a I don't want to say like an indicator, but it's almost like an indicator because we're not automatically taking signals based upon the flow. But we are using that as a way to enter into trades. So we talk about that a lot. We talk about different ways that you can develop strategies to play options and things like that. It's sort of a good practices type show and things like that. But we try to make it very interactive. We try to basically we try to make sure that you are getting your questions answered when you come to the show. We want to make sure that you, if you have something that you're curious about, we want to make sure that you can get it answered here. And so if you do have questions, please feel free to drop them in the chat. I will do my best to get to them as they come in. But if we kind of get going into a discussion or something like that, then I will try to circle back around as we have a break. Or if you have a question that you really want to get answered, normally at the end of the day, we always spend a couple of minutes wrapping up. And if there's a question that you really want answered, make sure you put it in the chat at the end of the show. And we will do our best to get to it. And then lastly, if you don't get anything answered, if I just completely ignore you, we'll put our website down in the chat, and you are able to connect with me on all of my social media. You can access our Discord channel, a little bit of everything. And so if you really have something that you want to work through, you want to get some questions answered or stuff like that, please feel free to reach out on any social media platform. My website is tradinggrounds.live, Twitter, Discord, TradingView are my three main platforms. And then obviously here every Friday night. So what an interesting day to what was an interesting week. Interesting week because it was a short week, of course, because the market was closed on Monday. But the sell-off at the end of the day, man, I'll tell you what, let me actually just click over here. We'll take a look at it together. So, all right, on the screen here, you were looking at the SPY 2-hour chart. Just to kind of give you a little bit of an overview of what we're looking at here. This is the SPY 2-hour. On the right-hand side here is my volume profile indicator. I know a lot of people ask about that. This is basically just showing you buy and sell volume by price. It's a good way to see support and resistance from a price level. So I rely heavily on volume profile. I am, as an options trader, I am mainly, like I said at the beginning, I'm focusing a lot on the options flow and alerts and things like that. But I am relying a lot on support and resistance, a lot on volume. And I do have the RSI down here on the bottom. It's more of a, I don't really even know why I use it, to be honest. I'm trying to have, listen, I'm not like my biggest indicator. Okay. If you want to talk about from an indicator perspective, I love the EMAs. I use an EMA cross as like a main signal. If you want to say like from a technical analysis perspective, like what's my trigger to kind of go in, the EMA cross is probably number one. I'm trying to pair the RSI up with that to kind of give myself a little bit more of a confirmation and try to like eliminate a lot of false signals and stuff like that. So the last like week or so, last weekend and then into this week and stuff like that, because of the holiday, I was really messing around with a couple different indicators and things like that. Nothing that I've put into practice yet. Again, I'm relying heavily on volume and things like that. But just to kind of give you an overview of what you're looking at here, the RSI is on the very bottom. These bars right here are just basically regular volume. I'm not concerned about up, down. I just want to see spikes. I know what it is based upon my colors. The lines here, of course, support and resistance. TradingView is TradingView is my main platform for charting. I do everything through that, and then I use Unusual Whales for options trading, the flow and alerts, and then I also use Benzinga Pro for options activity and for news and alerts and stuff like that. So again, SPY ended on a very just a concerning downtrend. At one point, let's kind of get into the candle here. At one point, SPY was at a high of 451.50, and we went all the way down to 445.44. So that's about a $6 drop. And for a Friday, that's, we're going to have lower volume, and it's going to be a little bit more difficult to kind of get some of your plays and things like that. However, this candle is pretty concerning. That's a lot of volume to be kind of pushing off at the end of the day. We can even go a step further if you want to see it in sort of like, I don't want to say like real time, but this is what happened at the end of the day. Okay, again, you're looking at the open as 451.49 was your peak, and then all the way down here, the low of 445.36 is where it bounced off of. But I mean, you've got 1, 2, 3, 4, 5 bars on the 15-minute was just nothing but selling. And again, as you can kind of see, not only was it the selling, it got more as the bars kept going. So it ramped up. It was, it was kind of interesting because it just happened like rather quickly. And here's what we'll actually just kind of transition into now, because this is one of the things that I always like to do when we are going over things on the show. So what I like to do is I like to talk about some of the options activity from the day and some of the big plays from the week. We kind of like to do a little, if anybody else saw, I put this up here. The book we recommended last time is actually A Complete Guide to Volume Price Analysis by Anna Cooling. I recommended it last week. I recommended it all the time. It's one of my favorite books. And if you are interested in learning more about like I think a problem with a lot of myself included, because I get guilty of this. We want to find that perfect indicator that's going to tell us every single time when to buy, when to sell. Okay. I got news for you, and I know you guys are probably aware of this, but it's not going to happen. There's not one indicator that is going to always give you the correct signal. There's not one indicator that's always going to give you a correct exit signal. Okay. But what you've got to do is you've got to find a system that works for you. Okay. You've got to find the indicator if you want to do that. But more importantly, okay, and I think I recommend this to everybody, is get to a point to where you've turned off basically all of your indicators. Don't flood your charts with MACDs and RSIs and all of these different indicators, because a lot of times what's going to happen is you're going to get sort of like an indicator paralysis, and you're going to be waiting for signals to go off, and a lot of times you're going to miss a play because your indicators are not telling you. Like most of the time, indicators are lagging. Okay, so like for example, the EMA cross, it's a fast indicator when it comes to the moving averages, but it's lagging a little bit. It's not predicting. It's showing you what's happened. And so with a lot of indicators, you're actually getting information that is lagging. Okay, so that's why price action, and that's why support and resistance, and we talk about that a lot. That's why that's such an important thing, because those indicators are not lagging. Price action is showing you in real time what's going on. Volume spikes and things like that are showing you in real time what's going on. Support and resistance gives you an indication of where the price could be going or where the stock is going to be moving to. So that's why I always tell people, listen, find yourself a good system, but make sure you're understanding how price works, how support and resistance works. It'll really help your trading a lot. It'll really help you if you're kind of stuck. If you're getting to that point of your trading career where you're like, listen, I just don't know what to do. I'm confused, and maybe turn off some indicators. But a good book to learn about that is, again, A Complete Guide to Volume Price Analysis. I've got it sitting over my desk because we're working through it right now in our Discord. It's available on, if you're interested in reading it, it's available on PDF. You can download it for free. However, it's very strange. If you get a book in PDF, they're really formatted weird. And I just prefer actually having a copy of the book in my hands. So I recommend getting the book. It's something that you can have on your shelf forever. It's a fantastic book. So anyways, as we were talking about with SPY, okay, just real quickly, let me click back over and show you. So in case you missed it, we've actually been our downtrend broke into a new downtrend, so that's very concerning. But again, we were in a downtrend, and then now we're in a new downtrend. So going into next week, somebody said it's $5 on Amazon for ebook. There you go. That's a fantastic deal. Okay, so it's $5 on Amazon. If you have a Kindle or if you have an e-reader, you can get it from Amazon. It's $5, 100% worth it. I agree. Definitely one that you want to have in your library to work through and reference a couple times. It's not a book that you're going to be able to cruise through. As somebody said, it's a little dense and it has a lot of information, but I don't think it'll be too much that it's going to go over your head if you're a new trader. I think it'll actually be a good place for you to start. So anyway, SPY is now in another downtrend. We've broke through a couple levels of support, and now we've settled around 445.50. And so it was kind of interesting because let's take a look at the options activity today from SPY. As you can imagine, SPY calls 0 days are always going to be on Fridays, are always going to be the most active. And so the 449 and the 450 strikes were the two most active chains for SPY. And then the third one was the 448 put. The 449 put and the 447 put, the 446 and the 450. So again, SPY is kind of all over the place. It's always going to be the most actively traded one. Let me do this though. Let's turn off all the ETFs and let's just look at actual tickers and see where we were at. And Apple is typically right up there. Apple and Tesla sort of battle back and forth. But it was kind of interesting to see with Apple because there was they had a bit of news come out, and I mean this right here, this candle, this selling right there, that is I don't want to call it like a complete I don't want to call it like a complete overreaction, but from this candle to there, I mean that's a $4 volume, that's $4 selling candle. That's a pretty big reaction. Okay, so at beginning of the day, again, on Fridays, you're always going to have a lot of activity on options, especially the 0 days. And when I say 0 days, I mean the options that are expiring today. You're always going to have a lot of activity on those. There was a big push this morning on a lot of the Apple calls as they were sort of moving this morning. The 155 call, as you can kind of see, was the leader, and that came in kind of early today. That was one of the bigger plays this morning. Not in America Airlines. I wanted to show you guys some of the bigger trades on Apple. The strike. So there was a lot of like deep in the money moves that people made today. The 150s though, let me try to see. The 155s actually seemed like it had the most volume. The 150s down in here. Just give you let you know what you're looking at right here. This is the Benzinga Pro Unusual Options Activity page. This basically is just showing you orders and it's showing you all the options flow to give you an idea of where the money is going, where's the big orders, who, where are people like sending their money into. But again, the 155 was actually the largest traded options chain today out of all of the chains. There was 195,000 total volume just on this one chain. That's pretty large amount of volume. Okay. And so then it's also interesting too that the third most traded was the same strike price, but for next Friday. So again, there's 183,000 contracts traded on Apple. And then according to the Unusual Whales intraday analysis, here's the big orders for the day. Okay. Now let's take a look at see here. This candle was at 11:15. And when did any of the big orders come in? So most of the big orders were going to be after that move. Okay. The number one from a premium perspective, the number one traded contract was the 150 strike for December 17th. Somebody placed a $4 million bet on that. That's a rather large order. And then the rest of them were all bearish. Okay. So again, you are like I said, we started the day off kind of, with a like a good possible push for Apple. We were trying to see, like, maybe leading into, they have their event coming up this week. I believe it's Tuesday. We have an event coming up on Tuesday that is where we're supposed to get a new iPhone. Now, I am of the impression that I think we're in like a period of trading where I don't think a lot of this stuff is having an effect on the stock. I think, again, the news today with I think it was the App Store and the lawsuit with Epic Games, and this is a big sell off. That's a lot of this candle right here was it was pretty large candle for just for selling. Okay. There, actually, let's take a look at this. Let me see what actually happened here. Okay, so there was 14.8 million, and that was in selling. So 14.8 million just in selling, because that candle right there, this indicator on the bottom, just give you a little bit of an idea of what you're looking at here. This is just buy sell volume. So it actually tells you it tells you the overall volume, but it also will break that down by buying and selling. Okay, so this whole candle had no trouble with any buying. Like, this was just a pure dump, and once it started going, there was nothing that was stopping it. So again, I'm not trying to say that it was an overreaction. It was kind of an overreaction, though. That's a lot of selling to happen, especially with a stock like Apple, and especially with the event coming up on Tuesday. Normally, what you would see is you would see people taking profits a little bit, maybe on Monday leading up to an event. However, that news that came out kind of pushed it over the edge. So again, this was court rules Apple must loosen restrictions on developer payment. Shares down midday. This was the news that basically pushed it, because this would have been about 12:54, so it would have been a little bit after. But this would have been the highlight of what the news was that pushed it and what caused the selling and things like that. And honestly, this is okay. So not to get like real like in depth about trading systems and stuff like that, but this is a lot of algos. Okay. So basically what you have right now is you have a lot of the algo traders that are just computers that trade back and forth all day long. And what happens is when you start to get like one thing selling off, if you notice, I think it was yesterday, if you notice, once one goes, everything else goes. That's basically just the algos that are picking up on heavy selling volume, and they're just automatically programmed. If something dumps X%, they do the same thing. Okay. So you notice that a lot of times what happens is it's SPY or it's triple Q. Once they start, you kind of see the other stocks start to follow. And that's basically what happens when the algos are all in sync, when they're all turned on, they're all trading news headlines, they're all trading whatever it is. But once one goes, the rest of them start to go. And so I think that's what happened with Apple today. There was the news came out, and a lot of the algos are programmed to recognize stuff like that. And once something happens, selling starts to go, the rest of them start to go as well. And that's what you see there. So that's why it's kind of interesting to see that this morning we had such high volume on this 155 call. Again, because at the end of the day, Apple's at 149, and there was a chance for it to get to 155, and I think that's why there was such heavy volume. Now that's why it's important to like pay attention to where everything is going, because again, there was a lot of volume in that one contract. There was even a lot of volume in this one for December 17th. However, the overall money, where the money was going in Apple, was definitely a bearish indicator. Okay. So that's why it's important that you kind of need to come up with a way to, you want to come up with a way to sort of zoom out and see what's going on past today. Because again, it's real easy to see this sell off, and Apple drop by, $4 or $5, and then SPY drop by $6. And there's a lot of stuff that is, in the process of there's a lot of selling. That's why you kind of need to zoom out a little bit and not be so concerned with what's happening on a 5-minute chart or a 15-minute chart or something like that. You need to have a system in place that's going to give you an idea of where people are putting their money past today. So I always tell people that if you're having trouble with if you're having trouble with you know, with your charts and things like that, or if you're having trouble with entries and things like that, then maybe you need to zoom out a little farther on your chart time frame. Maybe you not need to use such a you know, you don't want to use a 5-minute or 3-minute if you're having trouble. There's a lot of noise on those charts and things like that. So with something like Apple, you know, we can see overall there was a push in, you know, the call direction, especially lately. Again, you know, today's breakdown is showing us bearish. Okay, and then again, if we're looking at it from a total trades dollar amount, you know, there's still there's a lot of there's a lot of money that's flowing into calls, but you have to look at see these expiration dates. These are 2022, 2023, 2022. Like, here's the first one down here, the zero expiration. Okay, and again, it's the 150. So that was that the 155s right here. This was the hot ticker for the day, or this was the hot chain for the day. Now notice that they were on the puts, so that could be a buy to open put. We'd have to dig a little bit further on here, but like I said, we're trying to figure out a way that we're going to find out information for stuff down the road. Okay, today already happened. Tuesday's coming with the event. Let's, you know, there's not much you're going to be able to do between now and then. If you are going to try to get into, if you're not in Apple right now, I'd not recommend getting in before Tuesday. Unless you are planning on taking a position for a farther expiration. You know, it's going to be tough to like get involved with next Friday's strike. Now, don't forget too, another thing is next Friday is the third Friday of the month. And so that is the day that all of the options expire. So there's the weeklies and then there's the monthlies. The third Friday of the month, everybody's options is when that expires. So you have to remember that too. So I would recommend, maybe if you're not in Apple right now and you're trying to find a position for, you know, next week's event, maybe I would not be, I would probably not, like what I'm trying to say is, you know, I'm of the nature, I'm not playing earnings and I'm not doing events and stuff like that. If you're not in something right now, I would just go ahead and wait. Unless, I mean, I don't really, I can't imagine, again, I'm not going to be like a speculator and try to like call out prices and stuff like that, but I can't imagine, you know, I mean, the next, like, what is our next 146 is what we're looking at on. I just can't imagine that Apple's going all the way down to 146, especially now that it was up to, I mean, a new all-time high. And I mean, we were really, you know, having a very, very good move on Apple for the last couple of weeks. And then maybe this was, you know, again, maybe this was a good pullback. Like I said, I don't think that, I mean, it bounced. Look at that. So this is another thing that I like to use. I like to use Fibonacci levels. The clean bounce off this fib right here, the one I actually just have the price levels and things like that. But that, again, for the daily, that's a huge candle. That's a huge candle. Again, the selling one today. So again, that's just a quick overview on Apple because it was, you know, one of the bigger traded ones. Let me kind of go over some of the IVs because this is a hot area lately. Implied volatility, in case you're not familiar with what implied volatility is, this is just to let you know, this is bar chart. Bar charts is a free site that you can use for data. I use this a lot after hours and kind of on the weekends to go over just data. I just like to look at options data and things like that. This is something that we always try to go over as well to get you a little bit of an idea of where you can be trading options and some of the ones that are more popular. So what we can see here is clearly BBIG has been the talk of the town for basically all week now. Not really. Again, we're stair stepping. Okay, I think right here that it recovered from this little dip right here in the middle. I think that was promising. Again, we're basically almost at that bottom trend line, depending on how you draw them. So kind of telling from right here, this is going to determine which way it's going. There's been, again, we're losing volume, and so that's going to be the big thing that you notice about a stock like this. On a I don't want to call BBIG like a meme stock because it's not, but it's one of those ones that's running. Eventually, it's going to cool off, and somebody said they're calling it to 24. There eventually is going to cool off, and you can kind of see the volume decreasing as well. But again, it's had a pretty good run. I'm surprised that it's held up this long. I mean, again, even on the daily, it's kind of flattening out right here. It's kind of consolidating in this little range right there, and maybe trying to trade sideways a little bit. But when you get a stock that runs that hard, you need to have a little bit of a consolidation period. But again, the reason why I'm bringing that up is because I wanted you guys to see the IV percentage. The insane amounts of IVs on some of these contracts. All right, so based upon volume, let's kind of look at, actually, no, let's go by implied volatility and see which the leader was. Of course, it was BBIG. Okay, so somebody bought, there was 603 contracts of the $2 strike call, which is a huge, extremely deep in the money contract, but the implied volatility on that was 365. And then you had SPRT 1, 2, 3, 4, another BBIG. Then you had SPRT 1, 2, 3, another BBIG, and then so the reason why I'm showing you guys this is because I want you to understand, like, there's always going to be these little stocks that are running like crazy. Okay, and you have to be careful with these when you're playing options, because first off, implied volatility is going to crush you when it comes to your contract decreasing in price. Your implied volatility is basically showing you what the stock is capable of doing in a matter of seconds. Really, it's as you kind of get into some of these other stocks that are a little bit. Let's kind of go. Actually, this is the list, so we don't want to. It's going to show us stuff that we don't really care to see. The most active options, let's just say this right here. Okay, so Apple's IV rank, and again, is 23%. So that's showing you this is not its IV that's its rank. Okay, so that is showing you based upon its overall like rank, like on a scale of 1 to 100, where does it rank compared to other stocks? So you can see right here, BBIG is at 70%. So SPRT is at 61%. AMC is another one that is always, AMC's got to be on this list somewhere. Actually, let me just sort it by this. AMC is always on the higher list because it's got the ability to go to spike up or down rather quickly. But the IV stocks are important to see because these are the ones that are going to give you the opportunity to see like a really big spike in a contract rather quickly. Okay, it's going to give you the chance that if you are wanting to find like one of those crazy spikes on an options contract, a lot of times you can find them on the higher implied volatility. Okay, so BBIG, for example, again, across the board, again, that's what you want to see. You want to kind of zoom out and see what's going on. Now, this is the one thing that you want to see, though. Okay, with BBIG, you are seeing people buy extremely deep in the money calls. Okay, like the $3, the $4, the $5. People are buying those up like crazy. And I mean, again, you've got $6 million, $5 million, $5 million. They're all bullish except for one. Okay. The most active contract, again, you've got the 0 days as well, 0, 0, 0, 0. So the first 4 most active contracts are all 0-day expirations. And so what are you doing with those? You're day trading those. So that should tell you that there's, first off, let's look at it this way. So today there was 29K traded just today on this one contract. Yesterday there was an open interest of 17,000. So again, it increased, which that's kind of how you can figure out like, okay, it's Friday. What is everybody doing? Like yesterday, there was 17,000 was the volume there. That was the open interest. Open interest shows you basically what like open interest shows you who has not exercised contracts yet and how many are still open. And then the volume represents the actual amount traded during the day. So you compare those two numbers and it gives you where you can find unusual activity. because that's typically what you base your unusual activity alerts on, is once you see an open interest of X and then the volume coming in is such a substantial amount greater, that's an unusual alert. Okay. So again, all of these contracts here, except for this one right here, which is actually interesting because now we're gonna want to see this on Monday because these are the 917s. But it should show you that, like, for example, the 917 $20 call, there was an open interest as of yesterday of 44,000. And then today we had another 13,000 that were purchased on top of that. So that's, again, pushing us in the direction that maybe, the masses are thinking that BBIG is not done yet. Now, but what you also have to remember, though, is that retail is buying options on these stocks like crazy. Okay. So the numbers that you're looking at here are including everybody. They're all of. Let's take a look and see what some of the bigger ones, to get you kind of an idea of what some of the big orders were on BBIG. Okay, so from a total trade perspective, the overall number one was actually the January 2022 750 strike. Total premium was $560,000. The second was a put on the 917 for the the $10 strike. That one had what, 230K? Was there anything big? Oh, here we go. Okay. The 112,000 on the today's $10 strike. So that's a pretty good move. Trying to give you an idea of where people were. Again, these are all 0-day expirations. So this was a 0-day day expiration. So people are day trading those. Those are they're getting in and out rather quickly. But again, we're looking here and we can see a lot of activity, 17, 17, 17, 17. So for next week, a lot of people are right around, they're right at the money. Okay. And this was also another thing that we were going to talk about tonight too. I was going to clarify some, like, a lot of people ask me, like for example, somebody just said here, can you explain what a 300% IV represents? There's a lot of times that I get asked questions on, like, what does this word mean, or what does that word mean? So I want to make sure that every single week, if there's a term that is mentioned, we take a minute and we explain it, we talk about it, and then you leave with a better understanding of what the term means. Okay. So with the stocks, as you're buying options, you have in the money, out of the money, and then you have at the money. Okay. In the money are the ones that are typically, they're going to be, first off, higher premium. In the money calls are always higher premium. They're going to give you higher delta. Depending on the stock, the volume is generally the highest. Then you have at the money. At the money is normally 1 or 2 steps down from being in the money. And then out of the money is, the ones way farther out. Each of those has a certain set of traits that are unique to them. Like, for example, out of the money calls, they generally have very low delta. They generally have lower theta, but they also have lower premiums, and lower premiums are enticing. And a lot of times we play those as lottos, because you are with a lot of the times with the out of the money calls or out of the money puts, depending on whatever direction you like playing, a lot of times you are just simply gambling on the fact of getting close to, like, a lot of times you can follow a lot of volume. Okay. There's times that a alert will come through and a stock has a huge push on a call that's, 5 or 6 steps out of the money. And yeah, it's there's times that, like, wherever people are pushing their money into, there's times that you are going to get a good chance of maybe getting close, and maybe your call or your contract will spike a little bit. But don't try to, don't build an options trading strategy based only on out of the money calls or puts, because that is a surefire way to just blow up your account. Listen, in the long run, out of the money calls, or even playing like weeklies, like playing same day or same week expiration, that system is going to blow up your account. You really have to know, like, when you go into playing those types of stocks or those types of contracts, you have to understand like what's happening. Like, you have to understand that they move quick. The premium burn is a real thing. You can get into a contract first thing in the morning, and come 2 candles later, the thing is either it's worth zero, or you get in on a contract real low, and it happens to spike, and now you've got this false indication that like options trading is going to get you 200% every single time you trade. And again, that's both of those things are dangerous. One, because you're going to blow your account up, and two, because you're going to eventually blow your account up. But what I always tell, like, if you're interested in trading options, number one, don't trade weeklies. Okay. I do not recommend trading weeklies until you have a solid trading strategy, until you've sat and watched the options chains move, until you're familiar with all the terms for options trading, until you can understand the Greeks and things like that. I would not recommend trading weeklies. They are the most volatile. They are, going to cause the most heartbreak. They're going to be painful. It's going to be a bad time. I would focus on 20 to 40 day expiration. Give yourself a little bit of time to have that contract go through its ups and downs, and have it kind of drop a little bit and then try to recover, and then have it spike a little bit and miss out on profit taking and things like that. So I always say 20 to 40 day expirations. I would avoid playing far out of the money contracts, because again, you are generally going to just burn through your capital. You can, if you want to set up a system that you play, out of the money calls every so often, a couple bucks here and there. Yeah. You chuck $100 at it. If that's what your strategy allows you to, then that's not a problem. But you have to go into it with the understanding that like out of the money calls or out of the money puts are not going to be able to sustain you as an options trader, just plain simple. So I spilled water over myself. These are things that go into developing you as an options trader. And again, a lot of times people, they see these out of the money calls and they're so cheap, they're 5 cents, 10 cents, so you're $5, $10. I mean, what's that? But again, you go into the mindset of like, this is only $5. I'm gonna buy 20 of them. Now you're at 100. And so, you're going to lose $100 here or lose $100 there. I mean, that adds up. Your goal as a trader is protect your capital, even if you're just losing small amounts. This is this is good. I've never gotten anything but weeklies. Makes me nervous to own them for longer than a day. If you are going to play weeklies, okay, that is great advice. You don't want to own them any longer than a day. Because with a weekly, you are, again, the what's happening with a weekly, and we will kind of, morph our Greeks talk into, what it looks like to play weeklies. When you are playing weeklies, you are at the highest theta. Okay. So your contract theta is representing the amount that your contract is decaying the closer you get to expiration. Okay. So when you are buying contracts, if you're buying a put, if you're buying a call, theta is working against you. If you are selling to open, not selling to close, but if you're selling to open, like if you're writing contracts, theta is your friend. But for the most part, I'm assuming that we're all, we're buying calls, buying puts. Theta is your enemy. Okay. Theta is what is the number that represents your contract decaying. And when you are playing weekly, you're 5 or less days to expiration. That's the time that your contract is decaying the most. Okay. So your theta is increasing. Actually, that's pulling the contract down. You are then having to see a greater move on your stock to make up for that theta. Okay. You not only have to have the stock go up and go in the right direction, but it's got to go a decent amount, because it's got to cancel out that theta that's automatically happening. So from Monday to Tuesday on a weekly, say, for example, your stock doesn't do anything. It just trades sideways. Your contract's automatically going to lose money because of your theta. Then what you have on another thing is you have these stocks that you get into on these BBIGs, for example, or, any other stock that has a high IV. It's called IV crush. Okay. So the implied volatility is representing the spikes in the stock, higher or lower. You can spike in both directions, but it's also showing you that, like, listen, like, this contract has a chance of being murdered overnight. So you are now setting yourself up with two negatives. You have your IV crush, you have your theta. Those are two things that are actively working against you. And if you are involved in a contract with a stock like BBIG, that thing could do anything on Monday. Like with a more stable, let's say, with a stock like Apple, stock like Tesla, stock like, Microsoft, AMD, all the blue chips, all the big boys. Like, the chances are they're going to, you're not going to have you're not going to have to worry about like Apple dumping an offering on you and like you're now stuck with a contract that's worth $0. Like, that's not typically going to happen. But with a company like BBIG or what was the one that who dropped the Neo? Okay. I actually thought BBIG was going to be the one that did the offering, but Neo did. So for example, and their offering, actually, if you read the verbiage on it, it was a pretty good offering. It wasn't a horrible one. Normally, when you get an offering on a company like Neo, it's good, but you still got to sell off as a reaction. But with a company like BBIG, they could drop an offering. Okay. And a lot of times companies drop offerings 430, 405, whatever. They drop an offering, and now your stock has gone down. So that's working against you if you've bought a call. Then you have your implied volatility is going to change because the stock doesn't have that great of a chance of spiking again because of the offering, which causes the contract to be worth even less. So now you've got those two things that are working against you. And now the important thing to know on a stock like BBIG is you want to be in and out as quickly as you possibly can. You like don't try to ride it for some like 500% gain, or don't try to go crazy or anything on that. You want to get the profit that you can get and move on to the next one. Like you just want to focus in on getting your profits on a stock like that. Don't try to hold it, because you literally, like, it's going to happen to you. If it hasn't yet, it's going to happen to you. You're going to be involved in a stock like BBIG. They're going to drop an offering at 4 or 5, and you're going to have 25 calls that you're not able to get out of until 9:30. Okay. 4 p.m. till 9:30 the next morning is a very long time as an options trader, especially if you've got positions open. Just so with a stock like BBIG, yeah, there's been a lot of volume on it this week. There's a lot of social chatter on it. There's a lot of movement. There's a lot of money flowing into it. Absolutely. And you, of course, want to find out where, like you want to be involved in the stocks that other people are being involved with, and you want to be involved in the options that people are trading and things like that. That's the biggest thing as an options trader, is you want to find is the volume. You want to find where people are going. Absolutely. But you also need to set yourself up for success and realizing that the stocks like BBIG are going to come every week. Okay. Next week, it's going to be something else. The week after that, in a couple of weeks, we're not even going to remember BBIG. There's going to be a stock like that every single week. Okay. Every single week. So let's look at this one other thing here. Another thing I want to show you guys is change in open interest. An increase in decrease in open interest from the previous session indicates new positioning with a decrease signaling closing trades. Okay. So the open interest so basically what we're looking at here is a change in, this is kind of like a way of, actually, let's do this. Let's look at volume first. Let's go to activity and let's go and look at volume. Let's look at, so we had, I'm trying to find one of the, this was a crazy one. Let's actually pull this up. I want to talk about this one real quick, because this was this was Mr. K. No, MRK. Where was the 75? I think it was 20K. This one, here it is. Okay. So the this came out actually on the flow at I tweeted it out, so I don't remember the exact time. But this was live. Actually, let's just go grab it. And right here. Okay. So this came through on the flow. All right. This order right here. This is a indicator. Actually, there's two that came in, and they came in within 4 minutes. That's pretty interesting. Okay. So this is the same person. Okay. These are two orders right here, but it's for the same person. Because the strike is the same, the expiration is the same, the price paid was the same. So you kind of see what's happening here. Like that was one person betting like really big. Let's check on this one too, just to make sure. Yeah. Okay. So the 1119, 1119, 1119, there was actually three large orders. What does on the flow mean? Okay, so basically, let me kind of go over this real quick. What you're looking at, let's clear out. Actually, no, we'll just leave it on this. Okay, so options flow. This is unusual whales. And then I also have over here, I have a Benzinga Pro. I use both as a combination for my options trading. If you're familiar with what the term level 2 is, level 2 data shows you the orders, and it shows you time and sales for stocks. Level 2 shows you where the walls are. They show you, where people's orders are set up and things like that. But it's giving you a tape. It's showing you the orders coming through as they're buying and selling, things like that. That's what the flow is for options trading. Options trading gives you a overall order by order by order flow that you can watch. Now, let me kind of preface this as well. Like I said at the very beginning, this is difficult to understand. Okay. It is not something that you can just dive into, and it's not something that you're going to be able to use as an indicator by itself. Okay. Let me say that again. Options flow is difficult to understand. It can cost you a lot of money if you are not familiar with what's happening. If you are not if you don't understand what you're viewing, it's going to cost you a lot of money. But if you spend some time and you study it and you get a system that allows you to incorporate options flow, it can drastically change the way that you play options. Now, I do not use the flow for 100% of my trading. I have a strategy developed throughout the week that I am playing a lot of, I'm scalping or day trading a lot of options, and then I'm swinging options as well. And a lot of times I am getting my farther expirations from the flow. So for example, today, as I was watching the orders come through, these two actually I saw come through on the tape. That's when the tape is another word for flow. I saw these orders come through, and immediately, you can that 20,000 of anybody is a large order. Okay. Especially when you have, a $4 million premium or a $3 million premium. And especially when the open interest yesterday was 1.2. Okay. So that is a lot of signals telling you something's going on. Okay. So again, what you're seeing here is ticker MRK, the 75 strike. There was a total of basically 36,000 contracts bought for $7 million in a couple of big moves. It was just that easily. Again, you have a call sweep, People wanted those as quickly as they can get them. When you see a call sweep, you can see a call trade. Those are two different types of orders, but basically when you see a sweep, somebody wants those contracts as quickly as they possibly can, and they don't really care about what the price is. A lot of times you will see, I don't have it pulled up, but a lot of times you'll see when a sweep comes through, you'll see what's called an above the ask. And if I'm actually, let me just do this. I want to see if none of those were above the ask. Okay. So basically on Unusual Whales, which is the platform that I use, on the emojis section, you will actually see a tag on the order that will show you if it was above the ask. And that basically means that somebody was paying more money than somebody was asking because they wanted it so badly. You think about if you're in a bidding war with somebody and you're trying to buy a home, and somebody comes in and says, I'll pay this much more. That's above the ask. That's because they want that house really badly. They're willing to buy it for more because they want it so badly. So when you see a call sweep and you see it also in conjunction with above the ask, somebody really wants those contracts. That is a huge, huge indicator that you could pretty much bank on this happening. Okay. Somebody is paying $7 million in a call sweep. They're they're, you know, again, a lot of times when you're looking at the options flow, like a retail guy did not come in and buy 20,000 contracts of MRK at $4 million. Like these are whales. Like these are, that's why it's called unusual whales. But these are hedge funds. These are whales. These are people that are not retail traders. Now, again, on the options flow, you know, you can see retail orders, like, you know, you can filter that stuff out, which is what I do, because I'm not concerned with the small little orders and stuff like that. If I'm concerned with that, I'll just look at my own orders. But you can filter this stuff out depending on what platform you use. Same thing with Benzinga. I've got my filters set that where I only want to see orders greater than 500 or more. I'm only concerned with the big things. I don't want to see the flow on like 1 and 2 and 3 contracts. Does not help me at all. That's not unusual. That's just people buying contracts. And I don't need to see that stuff. So you need to set up a system, you know, whether it be through unusual whales, whether it be through Benzinga or whatever other options software you use. If you decide to go down that route, you have the options of being able to filter everything down. You want to turn off as much as you can. Again, you want to filter as much as you possibly can. Don't try to go into it with the thinking of like, listen, like I am the guiltiest of this. I would, Casey asked about the filtering process, so we'll talk about that for 1 second. I am very guilty of this. I could sit and watch the flow order by order by order by order all day long. I love like watching it. I just find it interesting. I like to watch where the money is going and things like that. However, it's not like, that's not helping me. If I'm watching every single order come through, it's overwhelming to me. So a lot of times what I'm doing is to kind of clear this back out and start over. I only want to see certain orders. You know, I only want to see, you know, contracts of $0 to $10, or I only want to see a premiums of 50K or more. I only want to see on the ask side. I don't care about puts. My strategy, typically, I'm buying calls. That's what 99% of my ordering is I'm buying calls. I prefer to get involved long that way. I don't prefer to go the other direction. Again, not saying that I won't, but my primary options trading is to buy calls. I do buy puts every once in a while. However, my primary strategy is to buy calls. So I am focused in on the flow. I am focused in on seeing that side. Again, I don't want to see ETFs. I don't care about the big orders for triple Q. I don't care about SPY. If I'm playing those, I'm playing it in an entirely different way. I'm playing based upon support, resistance, and volume. That's it alone. So I don't care to see on the flow what's happening with those tickers. I don't want to see that. It's just too much data. It comes in every 5 seconds. So I filter as much as I can. I have watch lists set up, and I have specific notifications set up for, you know, 20 to 40 day expirations. I only want to see calls that are expired, or I only want to see orders that are the 20 to 40 day expirations. You have the ability to do that. So on both platforms, you can go into your filters here. You could set up expiration dates. You can set up dates to expirations, whatever you want to do. Same thing over here on Unusual Whales. You can go down here and click your days to expiration range. If you only want to see weeklies, do 0 to 7 days or 0 to 5 days, whatever the date is lining up as. If you only want to see, again, you know, your spot range is showing you what the under the contract price is. If you only want to see, you know, $5, if according to your trading plan, you're only spending $5 or less, then turn off everything over that. You have no need to see that. Yeah, it's cool to see these large orders coming through and stuff like that, you know, but your goal is to help yourself as a trader. Is, you know, if you want to sit and watch the tape, you know, do it on the weekends. Go back and scroll through it then. You want to see what's going to help you get into a trade. And so filtering as much as you possibly can is what you need to do as an options trader. So, you know, again, that's how I'm getting a lot of my orders. That's how I'm getting a lot of my plays with options. I am throughout the week. I'm scalping calls. I am day trading calls. I'm buying contracts that I might swing into next week, or, you know, I'm not really holding like options like for a lot of time. I think that options are too volatile to be now, unless you own the shares and you're using options as a means of hedging, that's a different story. I'm not doing that. I am never CCJ. Does anybody remember last Friday, if you were here when we talked about CCJ and we looked at the activity on CCJ, and we saw all those orders, and we were paying attention to that, and then you saw what it did this week. If you're not familiar with it, but again, this was a big move. This was a good one to be ahead of. This was, and it still is. Again, you've maybe got a little consolidation right here in this area. However, there's a lot of money being put into CCJ right now. We looked last week at the flow, and we were able to spot a lot of orders and a lot of dollars being put farther out into CCJ. And just by looking at this here, there was a ton of orders. Okay. So again, the 10-15 and the 12-17s, everybody say hello to Baron. Baron is here. Baron, how did Lotto Friday go for you? It went okay. I didn't really trade that much today. It was all right of a day, I guess. I was messing around with a bunch of different stuff, and so I didn't really take that many trades. I've got a couple things that really what did it was at the end of the day, sort of like the sell off. I've got some stuff that is coming up in the next week or so that I've got some positions for next Friday that I'm hopeful for. LCID. LCID had one big order for today. Not much from a big perspective. There hasn't been in a while either, really. Let's look at today's breakdown on LCID. Yeah, so somebody in the chat asked about LCID, and this is an example of there's not too much money flowing into it as of right now, because you can see, like, for example, this one was a super deep in the money call, I believe, and then you have another 2023 that was a FAR expiration that had some decent money. This one right here was a sell to open, but that was today's expiration. So not much, not too much activity. Again, 18,000 is the most traded. I mean, that's a lot of volume. Absolutely. But I mean, they did have a price target that came out today. Citigroup starts Lucid Group at buy with a price target of $28. Right now it's at 5. Okay. So again, that's a pretty good price target. It did break its downtrend, which is encouraging. It did, as you can see here, a bounce clearly off that bottom support level, and then it broke this above resistance. Now, unfortunately, now this is its new support right here, and it's already, it's got one more level that it needs to break through, really. But there is a chance that this new level right here becomes support, and it can, sort of move. But I mean, $28 is the new price target, which is the old high, it looks like. No, there's a couple more highs than that, but the most recent high is around the 28 level. But again, there was not much of, it's kind of trading in this range. Again, it was in a little bit of a downtrend. However, it did break, which, again, bounce off the bottom level right there. So yeah, there's light volume on it, but real quickly, we got time for one more ticker. MRNA, one of the big boys, MRNA. Okay. So MRNA, let's get it here. Let's get it set up. All right. So MRNA peaked through the 462.57 fib. It's settled down around 449.82. MRNA. This is interesting. Okay, so bearish. So sell call, sell call, sell call. See all these right here? That is selling to open. Okay, so people are selling to open these calls because they are. So you have to remember, when you sell to open a call, you're banking on the stock going down. When you're selling to open a put, you're banking on the stock going up. Okay, so the fact that all of these here are selling calls, you know, again, I mean, like what are we at here? I mean, we're at, this thing is cooking. All right. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row now where it's basically been in a solid uptrend. Um, I mean, again, you're at a fib level. Okay. So this level right here is its new resistance now. You are, what's volume doing? Is there anything really going on with volume here? You're above the previous volume resistance. I would call this like a volume shelf. You're in an area again where you're very thin. So my thinking here is if it can get above this 462 level, it should test the previous high. It should be back at 497.88. However, let's look one more time. The general sentiment on Mrna is, I know it's not, I just pronounce, does anybody else do that? Like I know the name of the company is not Mrna, but I just pronounce the tickers as they look. And so like I'll say something to a person, I'll be like Mrna, and they'll be like, what the heck is Mrna? Like, yeah, Mrna, you know. You have to kind of look and see what everybody else is doing. And for the most part, the money is going to the bearish side. Let's take a look at this one too. Now, so the big two orders were, somebody said it might retest the 500 level. Yeah, I agree. I think right now, you know, there's so much gas that there's so much, every single day, there seems to be something going on with vaccine news. And so that's one of, you know, the stocks that I think you always need to have on your radar. It always needs to be on your watch list, like PFE. For example, you need to have that on your watch list, have alerts set up or something like that so you can get involved with it quickly if you can. Again, I think that's one of those stocks that it's got something that's working on it for, I mean, look at just not too long ago, it was at 217.59. It's up almost $240 since then. In July 8th to September 10th. Okay. So that's 2 months. It went up by $230 or something. Pretty good. But even just from like, let's look at this real quickly. Even just from like a perspective of like, look at this chart. This is a good looking chart. Like just plain and simple. This is a very strong chart. And again, you know, your overall volume, you're from right here to right here, this is basically just one solid area of accumulation. This is just a little sideways trend. Obviously, you have this large volume down here, but that's to be expected when you have a stock that tests $500 just from 2 months ago when it was, again, we're saying that we're looking at a stock that's up by, you know, a huge percentage. You're going to have people that are taking profits. But again, most importantly is to watch where the support and resistance levels are. What is it doing in relation to those levels and previous highs and stuff like that? The big area, again, was this right here. This section right here was this was the sideways. This was the consolidation. This was the area that if it was going to make a move back, it needed to get through that. Again, you can see that here based upon the volume profile. You can see that these bars, the farther they're out, the meaning the larger the amount of volume is there. But again, this section right here, there was a lot of meat that it had to get through. It did. It bounced off its previous support. It broke through a resistance. Again, it continued in an uptrend. Just very clearly, it's trending in the right direction. Again, if you kind of want to get an idea of what we're looking at here, you know, you're now right here is your new resistance, okay, based off of our previous candle wick. Again, bottom support clearly there. It's into an area with thin volume. It's got the possibility of making a run short term. Okay, I think is what you're probably going to see. I think we're going to eventually get a little bit of a slowdown on the vaccine talk and stuff like that. You know, however, the targets of what we're looking at down the road. That's why I was saying earlier, that's why it's good to always have a system that lets you see farther out, like where's the money going. Okay. For this one, we had a lot of action that was bearish today. So the premiums and the money was flowing in a bearish direction. But again, you have to look at these expirations: 2022 October, 2022 October, 2023 October 2022. So we're not looking at anything short term here. These aren't day trades. These are big orders that are being pushed farther out based upon what they expected is going to happen. So as we were looking at a stock last week, when you see a flow of options activity that is very bullish up towards, the current date, and then there's maybe a little bit of a break, and then farther out it's very bearish, that plan your trade that way. Okay. If you're going to get involved in this type of a trade, set yourself up for a short-term trade. That would be my leaning. If you're going to want to play something farther out, your expiration is maybe into October or however else your system works, then you're going to maybe want to change your perspective, but at least have the data available for you to make that decision. Okay. All right. It's 6:05. We're going to get wrapped up here. I appreciate all you guys stopping in tonight. Again, let me just drop the website. Let me drop my website in the chat. So if you are interested in chatting more, we can talk throughout the week. I'm very active on Discord. So if you're interested in like doing any sort of one-on-one education or stuff like that, I just ask that we do it through Discord, because I try to keep all of my conversations centered on Discord. It's easier for me. And it's just a great platform. I use that heavily. And so if you are interested in doing that, yeah, send me a message on Discord. I also have like all of my other social media on my website. This platform that you're looking at right now is called Unusual Whales. If you're interested in learning more about options flow, that's primarily what this is for. Now, Unusual Whales is it's got a lot of information. Okay. But one of the cool things about it is it's also got, it has a news flow. Okay. So that's one of the other things that he recently added was a very in-depth news flow. Okay. Now let me also just preface this by saying I also use Benzinga Pro. And so when I'm using Benzinga Pro, I'm using it for the news alerts. Okay. So in my opinion, if whatever you want to think, I'm on Benzinga. So of course I've got to pump it. I don't have to. I do this by choice. And if you've watched me for long enough, you will start to realize that I do not promote something that I do not use. And so again, Benzinga Pro is my favorite platform for news. Okay. So I use Benzinga Pro primarily well, I shouldn't say primarily. I use it for a lot of things, but I do have a lot of news alerts that come through on that. But Unusual Whales has a really, really cool news alert system. You can view it in certain ways. You can view it by rumors. You can view it by analyst changes, which is another one of my categories that I love reading the news on. But as I was saying in the beginning, my main use for Unusual Whales is watching the flow. This is part of my system. This is how I'm trading options. And so I like to know what's going on. And I've adapted a system that uses the flow. I do not recommend going blindly into it. But again, this program is called Unusual Whales. Okay. So that'll do it for, oh, wait, we have one more. Mrna is so volatile and very sensitive to news catalyst. That's a very important thing to remember. Very sensitive to news catalyst. Okay. So when you start seeing the negative press on vaccines, or if you start hearing, stories about stuff like that, you have to remember that these the stocks are going to react very, very extreme to something like that. Okay. Just be careful with that. Again, you cannot day trade it without bracket orders, multiple dollar swings, and 5-minute candles. Exactly. Take a look at let's look at the 5-minute candles real quickly. And you can see that some of these candles are huge. Okay. Like some of these orders right here, these candles, that's a lot of action right here. Just this little section. This candle right here is 459 to a low of 450. That's a $9 candle. Art said similar to Black Box. Yeah, exactly. Unusual Whales is very similar to Black Box. There's numerous options flow programs. Listen, I personally use Unusual Whales. A lot of guys that I look up to and respect, they use Black Box. I think you've got to find the one that works best for you. There's so many that you can look through. I think, but again, more importantly than that is having a system in place that allows you to use that software effectively. Benzinga Pro offers a fantastic unusual alert for options activity. Again, I use Unusual Whales. There's Black Box, there's Cheddar Flow, there's Flow Algo. There's tons of stuff now. There's no shortage of options flow programs. Find the one that works for you. Most of these companies are going to give you either a free trial or they're going to give you a discount to try it out for like a week. I recommend doing that. I recommend going on YouTube and watching as many videos as you can, because again, I use Unusual Whales. Somebody else might not like that. Somebody uses black box. You might just like, don't base your decision just purely off what anybody else uses. Find the one that works for you, because that's what is most important. You want to have something that's visually appealing to you, but more importantly, you want to have something that you're going to use to actually help your options trading. Okay. So let's end with that. If you have any questions, again, that I didn't get to, please send me a message through any one of my social media platforms. One last drop on the website, tradinggrounds.live. We're here every Friday night. One more reminder, we're here every Friday night, 5 p.m. Eastern. And then throughout the week, I'm always active on social media. I'm always chatting on Discord. I'm always active on Twitter. Shoot me a follow, shoot me a message. We'll chat. Let's become better traders together. Let's work together one another. We're not here to try to, outdo one another. Obviously, yeah, we want to make better trades, and we want to work hard and be better than the best. However, when you find yourself involved in a trading community and you're working together with other people, it really helps you to become a better trader yourself. So keep that in mind. And listen, hey, we're back on Monday because we do not have a holiday. So it's going to be a quick weekend compared to last. So any other questions, shoot me a message online. If not, I will see you guys next Friday, 5 p.m. Eastern. Have a wonderful weekend, guys. Talk to you on the next one. See you.